Ladies and gentlemen, good day and welcome to the Godawari Power and Ispat Limited conference call hosted by Govindi Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Sana Kapoor from Govindi Advisors. Thank you and over to you.
Thank you, Mike. Good afternoon, everybody, and welcome to Godawari Power and Ispat Limited earnings call to discuss the Q3 and 9-month FY23 results. We have on the call Mr. Abhishek Agarwal, Executive Director, Mr. Sanjay Bothra, CFO, and Mr. Dinesh Gandhi, Executive Director. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good afternoon, ladies and gentlemen. I would like to welcome you all to the earnings call of Godawari Power and Ispat Limited on behalf of the company. Our Q3 FY23 results and earning presentations have been uploaded on the company's website and stock exchanges. I believe that you have got a chance to have a look at it. Just to begin with, it was an exciting quarter. We saw many important and strategic developments. To begin with, Government of India in the month of November removed the export duty on iron ore pellet and steel products, which was levied in the month of May 2023. This was contrary to the popular perception and surprised many. Most expected that the iron ore pellet export duty, export tax will not go away fully. It is now clear beyond doubt that Government of India has no intention to taxing the iron ore pellet and sees it as value-added product and not par with iron ore. Pellet industry is generally huge employment and taxes and contributing to the growth of Indian economy. This move by government has made us more confident, and we have accordingly announced doubling of our iron ore mining and pellet capacities. The capacity of our Aridongri mine is proposed to be expanded to 6 million ton from 2.35 million ton presently. Additionally, a 6 million ton iron ore beneficiation facility is also proposed to be built at the mine itself. Both these projects have a combined capex of about 200 crore. Another 100 crore of capex is proposed to be made to increase the pellet capacity from 2.7 million ton to 5.7 million ton by establishing a new 3 million ton iron ore pellet plant at the existing plant location. In this regard, I would like to clarify that although the company had announced the capacity of 2.7 million ton of pellet originally, in view of availability of a single unit of 3 million ton pellet plant capacity, we have decided to increase the capacity from 2.7 to 3 million ton of the proposed plant. And therefore, now the overall capacity would increase to 2.7 to 5.7 million ton. With the increase in 0.3 million ton capacity, there will not be any corresponding increase in the pellet cost. It will continue to be able to set up within the 800 crore plant capex. The plan to set up 1 million ton greenfield steel project is still awaiting process for acquisition of leasehold and other approvals like environmental and approval, water allocation, etc. The final plant configuration and product mix shall be, is still being worked out and shall be announced with the announcement of the capex postcard receipt of all these approvals. However, further as a forward integration, we have decided to increase the capacity of our steel billet plant from 0.4 lakh ton to 5 lakh ton, which was put on hold, and also decided to undertake modernization of one of our existing rolling mill with a capacity of 2.16 lakhs to convert the same for manufacture of steel structural and strip mill as a backward integration to our fabrication, galvanizing facility, and backward integration to our ERW pipe capacity. This will help us to set up a precedent of experience and setting up larger rolling mill for manufacture of narrow width strip for manufacture of ERW pipes with our greenfield steel plant. In the meanwhile, as detailed in our presentation, we are continuing with our normal capex plan for setting up of the solar projects and other efficiency improvement capacity expansion projects, mainly funded through the internal accruals. This includes, 600,000 ton beneficiation plant at the mine and steel billet capacity, etc. The solar power plant, the company has already commissioned 70 megawatt solar power plant at Rajan and started drawing power from that plant. The acquisition of Jagdamba power plant has also been completed. Regarding other two solar projects, one solar project of GPL with a capacity of 30 megawatt is expected to be commissioned by end of June, for supply of power to our mines. And another project of 60 megawatt capacity for Hira Ferroalloys is expected to be commissioned by March 2023. Coming on the operational performance, production of iron ore, mining and pellet production has increased by 4 and 2% respectively during Q3 FY23. The production of steel billet increased by 80%, HB wire increased by 306%, and galvanized fabricated products by 22% on YOY basis. The sale of pellet and steel billets were up 9% and 321% YOY, whereas sale of sponge iron and roll product reduced by 55 and 67% respectively. Mainly, the fall in sponge iron and roll product sale is mainly because of sale of partially the steel billet and roll products. Ferroalloy sales volume for GPL and HFL both increased 50% quarter on quarter on 50% and 20% respectively. The market price of iron ore for Q3 stood at 5,500 rupees ton, whereas company's captive iron ore landed cost was about 3,000 rupees a ton, showcasing competitive advantage for the company having the captive iron ore mine. Coming on the financial performance, consolidated revenue increased to 1,463 crore in Q3 FY23, up 12% quarter on cost basis, but down 9% YOY. The lower sales on YOY basis was mainly due to fall in realization of pellet and ferroalloys. Higher QOQ sale was on account of trading sale of 241 crores. Excluding trading sales, there was a fall in the revenue at rupees 1,222 crores. Consolidated EBITDA was 173 crore, is down 25% quarter on quarter, 65% YOY, mainly due to lower realization on YOY basis for the pellet and sponge iron and other value-added product on quarter basis. As you are all aware, GPL is a debt-free company, and as of December, we had a net cash of 600 crore. Coming on the market outlook, global outlook for iron ore is positive. Prices of iron ore have risen from a low of 78 ton late last year to $120 currently. Sudden shift in China's COVID policy has turned the sentiment to positive. China is looking to revive its fledgling property sector and has announced number of measures and increased liquidity. At the same time, China as usual focusing on infra spend to support economic growth. All these argue well for higher steel production in China and stronger demand for iron ore. Another factor working in favor is weather-related disruption in Australia and Brazil. Iron ore demand supply is finely balanced, which should keep iron ore and therefore pellet prices well supported. Domestic steel demand is very strong. Indian government in its recent budget has announced increased capital outlay by 33% to 10 lakh crore and also increased railway outlay to 75% to 2.4 lakh crore. This argues well for the steel demand in the country, especially for long steel products. The current steel prices of the normal grade pellet is holding about 10,000 rupees a ton. The prices of sponge iron and other value-added products like billet, roll products, etc., have improved to Q2 level, which we had seen a fall in Q3. With this, I conclude my opening remarks and open the floor for Q&A. Thank you, and over to you.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Jitin Damania from Kotak Securities. Please go ahead.
Thank you for the opportunity. I just wanted to understand, because in the previous call, you stated that...
So Jitin, your audio is not very clear. If you could kindly go off the speakerphone.
Now it's audible?
Yes, it is. Thank you.
So just wanted to check that in the previous call, we have stated that the current order book of a pallet business was driven by the domestic order. Now, with the removal of this export duty, how are we placed in terms of the domestic order book, and have we got any inquiry as far as the export order is concerned?
Good morning. Dinesh, I'll take this question. On the pellet book order side, we still haven't started exporting because the domestic license are still much better compared to the export market. On the inquiry side, of course, we have been getting regular inquiries from our regular buyers, but the delta between the domestic and export is almost 20 bucks, which is a substantial difference. So the moment company is focused on selling everything domestic, but we are always open for export given the price realization.
Right. And as per the presentation that you have said that we will be probably increasing our mining capacity from to 6 million ton in next 18 months, and the remaining, the pellet will be probably coming in the next 16 months. So by any chance, are we looking at selling incremental iron ore mine in the market in FY25-26 before the pellet comes in place?
No, we have no intention of selling any iron in the market. We want to, elongate the mine life. So we will mine as per the requirement of the pellet plant. We have no intention of selling in the market.
Sure. Thanks. I'll come back in a queue. Thank you.
Thank you. We have the next question from the line of Mitul Shah from Reliance Securities. Please go ahead.
Yeah, good afternoon, sir, and thank you for giving audible clearly.
Yes.
Yeah. Sir, you have given a remark that now prices are have reached to a Q2 level which dipped in Q3. So can you give few ballpark numbers? It is almost at a Q2 average or peak level of Q2. And second question, how has been the volume trending in Jan, February? And what is the outlook for this quarter and maybe next 1 or 2 quarters after this export duty being removed? So any traction in terms of orders and all?
See, let me clarify. I said in my opening report that pellet prices are holding about 8,000 rupees for normal grade and, about 11,000 rupees for the high grade pellet. And the prices have, come back to the sponge. For sponge iron and other value-added products like billet roll products, the prices have gone to Q2 level. Q2 level meaning, sponge iron at 32,500 is still billet at 48,000 rupees a ton, and wire about 50,000 rupees a ton.
Okay, because these numbers seems to be at least 2 to 5% lower than Q2 average which we reported. So
Q2 average, sponge iron was about 32,000, 33,000, and it's the same level.
In your PPT, it's 33,900. That's why I'm asking.
Okay, no, so it is 32,000. Then I stand corrected.
Yeah. And secondly, on the volume side, how has been the last 1.5 months and going forward next 1 or 2 quarters view?
Pellet, you will see the normal volumes. So far as the sponge iron and finished steel, we have already announced, shutdown of our sponge iron plant and other value-added facilities, manufacturing like billet, etc. Because we have already reached the sponge iron plant utilization of more than even 98% currently, and we do not have scope to manufacture more sponge iron in the current financial year till March. So we are taking this opportunity, and if we are not able to produce sponge iron, then we have to shut down our waste recovery power plant and even the steel billet facility, because running billet facility and grid power does not make any sense. It will put to losses. So we have decided that sponge iron, billet, power generating capacity and other value-added facilities will all remain shut down till last week of March. And definitely the volume, sponge iron volume will go down considerably, and even billet and other products volume will go down considerably in the second half of the Q4 FY23. Pellet and sponge iron will continue to operate. Pellet will have an usual capacity, production of about 650,000 tons, and ferro is at about 4,000 tons per, for the quarter. Sponge iron, Abhishek, can you tell me, how much is the exact would be the production till now?
So till now we have produced about 485,000, and the capacity is 495.
Current year number you give. Current quarter.
Current quarter, so we have produced say about 50,000 tons till now, and additional 10,000 tons of production. So total volume will be about 60,000 tons for Q4. 6000. That's it.
Okay. Sir, and lastly on the capex side, we are planning to spend 400 crore for this year. For after this change in few dynamics, FY24, what one should consider as a ballpark number or any change in our plans?
See, out of this capex, power generation has already started building into the numbers. Jagdamba power plant is already operational. We have already put to use our 70 megawatt solar power plant, and the additional solar capacities will come into the production where we are likely to save 3 rupee per unit of the power generation. And this plant will operate at about 15% capacity utilization level. Steel billet is still, from 400,000 to 500,000 tons will get commissioned by September, and this will coincide with commissioning of our new furnaces. So impact of that will come in the next financial year. We already said that, the additional power generation capacity of 8 megawatt will be available when we commission the new turbine. And sponge iron, billet capacity will definitely help us, produce more structural and other steel where we should be able to save 1,000 rupees per ton.
Okay, so we earlier indicated somewhere around 500 crore kind of annual capex for next 2-3 years. So would be in the similar range, right? Yeah.
This 400 is already, coming it from the last year. We have not announced new capex in the current year except the 70, one rolling mill modification plan.
So I'm talking about 24-25, FY24, FY25, maybe FY26, those 2-3 years.
Yeah. That in those 20 years, the new mining and pellet capacity will come.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. We have the next question from the line of Chirag Singhal from First Water Capital. Please go ahead.
Question. Sir, I wanted to know what is the coal consumption cost for Q3 and what was it during Q2?
Coal as in
yes, go ahead.
For DRI talking about?
Coal consumption cost for Q3 as well as Q2.
That's what I'm asking. Coal consumption as in for my sponge iron or because coal is being consumed.
For sponge iron.
So for sponge iron, Q2 was at levels of about 16,000 rupees a ton. Now it has come down to 13,000 rupees a ton. 13,000.
This is current. 13,000 rupees per ton is current.
Yeah, 30,000 is for the current Q4, and for Q3 it was about 16,000 rupees a ton.
Okay, and what was it during Q2?
This is higher, about say 17,000 rupees, because the international market of coal has started going down, I would say, in post-Diwali, which was November. So that's why the impact of 3,000 rupees is being affected in Q4. And I'm hoping, since the national market is downtrend, so in next financial year, the cost will further be, probably should be down by at least 2,000 rupees, somewhere in the range of 10,000, 11,000 rupees per ton.
Okay, this should be Q1 onwards.
Yeah, this should be Q1 onwards, yes.
11,000 rupees per ton.
Yeah.
Okay, all right. Thanks. I'll get back in the queue.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Prashant Kumar Kota from MK Global. Please go ahead.
Sir, good afternoon and thanks for the opportunity. Yes, sir, my question is regarding the proposed 1 million ton steel plant. Now, have we made up our mind fully and just waiting for clearances and commitments from government? That is the first question. And related to that, sir, have we also considered setting it up as a DRI or a thermal coal-based plant, wherein because the coking coal is always out of control, always that happens. So since you are already in a coal-rich belt, and probably if we get some good auction mine in the auctions at good price and coal mine, would that be an option that you would consider? And just wanted to know your thought process on how you would go about.
Okay. So on the 1 million steel side, the company is focused on setting up the plant, but of course, the land acquisition and water availability, those company is working on those fronts with the state government. That is taking much longer than we expected. And on the plant side, since you mentioned we should be work on, probably a coal-based DRI. So, what we have analyzed in, if you take an average of, let's say, leave the COVID period aside, if you consider an average of, say, 5 to 7 years between the primary producer of blast furnace versus the secondary producer through DRI route, the average difference between, the input to output is about 7,000 rupees ton. So there's additional EBITDA of 7,000 rupees when you go through a blast furnace route compared to, DRI route. And so we are very clear, we will be going with the blast furnace route. We have no intention of setting up another million plant through DRI route.
Understood. Sir, the 7,000 difference that you are saying...
Sorry. Prices are on the high side at the moment, which is very correct. But, if you see the long term, we think that the coking coal prices also will stabilize going forward.
Sure, sir. And you say the 7,000 rupees incremental EBITDA is because of the higher realization for the blast furnace based?
It's both. So the realization is higher, about say 3,000 to 4,000 rupees a ton. And on the input side, because of the process, since the power requirement is not there in steel making, the hot iron is directly melted into the LD converter. So on the operation side, the EBITDA is about 4,000 rupees ton and 4,000 rupees ton on the finished side because of the quality. So put together, about 7,000 to 8,000 rupees additional EBITDA will be there compared to the DRI steel making. So we have no intention of installing DRI and going ahead. We will be going with the blast furnace itself, as in when and where we get the required approvals.
Got it, sir. Understood, sir. Thank you. Thanks for the color. And all the best.
Thank you.
Thank you. We have the next question from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Hi, sir. Can you talk a bit about the 18 months timeline that we have given to expand iron ore mining in terms of when can we expect the clearances and then how long will it take to complete the groundwork?
Okay, so we have already applied for the environmental clearance and that process is already in place. We should be able to get the permission in Q2 of this financial year or early of Q3. And this is that. Moment we get the permission, we will start the mining activities. And on the beneficiation side, we already have a 6 lakh permission for beneficiation, for which the plant is already under erection stage, and the remaining capacity of 5.4 million tons will also start building up once we get the approval.
Okay, and sir, in terms of pellets, we are saying 36 months to expand it to nearly 5.7 million tons. So,
yeah.
So I thought, sir, it should take a little less than that. So
no, so issue is see 10 months to 12 months will go for the required approval, since we have to go to Delhi to the MOEF for the clearances, and then when we start the work, so the groundwork will take about 24 months. It's 10 to 12 months with the process which we need to get the approval from MOEF and then the State Pollution Board. So that's a total 36 months, and we have already filed for the TOR for the 3 million pellet plant. So that's the thing. So we should be able to start the groundwork, say end of Q3 of this next financial year, say November, December.
Yeah. Okay, sir. Thank you and all the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Sanjaya Satapathy from Ampersand. Please go ahead.
Sir, can you please help me in understanding that you have said that several of the prices have recovered. So what kind of margin that one can really look forward to in quarter 4?
Q4, there is one impact you will see. Negative side is from the closure of facilities for about 4 to 5 weeks. Barring that, our pellet, we will continue to operate at, say, more than, around closer to about 40% margin. And ferroalloys margin as usual are 18 to 20%.
Okay. And what about billets, etc.?
Billet will be closing down for 1.5 months. So whatever earnings it was there, it will go into fixed cost and maintenance expenses. So I'm not taking into account the margin for value-added facilities from sponge iron to finished steel.
Understood. And in terms of assuming that all this production would have been normal instead of the shutdown that you are taking, I'm just trying to get a sense as to where the prices and costs are and where exactly is the margin, assuming normal businesses.
See, majority of our margin comes from the pellet business.
Correct.
Majority of our margins come from the pellet business, but it's not that the value-added facilities does not contribute. It does contribute, and to that extent there will be impact, but there will be higher positive delta from the pellet business. And therefore, we have said in our announcement that although this will have a negative impact, but overall it will be positive and profitability is expected to be higher than the last quarter, that is Q3 in Q4.
So will it be back to Q2 level at least?
It could be.
Okay. And
depending on the average realization, but realization is, as I said, is around 10,000 rupees a ton currently, and definitely, last 1.5 months would be closer to average of last quarter. So definitely it should be better.
And how much was the pellet margin in Q3?
See, I'll not be able to give you in absolute term, but at about 2,000 to 2,500 rupees a ton.
2,500. Okay. Thanks a lot, sir.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Hitesh Arora from Unifi Capital. Please go ahead.
Thank you. Thanks for the opportunity. Just to clarify, just to get your revenue breakdown for the quarter, you've got your volumes and your realizations. If I multiply the volumes and the realization, I'm off by around 150 crores, thereabout. What constitutes the delta or the difference?
Sorry, come again. I'm not understood.
So in your presentation, you've got the volumes and the realizations for your, end products.
For Q3.
Yes. If I multiply those, I get a difference of maybe around 150 odd crores in the number that I get versus the actual revenue that
I've said in my opening remarks that the sales of 1,400 something crores includes 241 crore of trading sales.
Of trading sales. Okay.
Yeah. Therefore, this difference is coming. If you reconcile with that, it will get reconciled.
Okay. How much did you say? 240?
241 crores.
Okay. Is the trading. And this is normally you do it every quarter, the trading business?
No, it is not higher because we had done certain, I think it is call contracts, no?
Yes, it is regarding the coal contracts, yes.
Yeah.
Okay.
So, in fact, I'll just to clarify, for the larger audience, we had done some hedging for the coal. So, some transactions have settled as a, trading sales. Some we took delivery, some were settled. So, that way the difference is there.
And what this 250 crore number
in fact, because of the accounting standard, it is appearing as a trading, but otherwise, if you consider this as an hedging mechanism, then it is a part of the reduction in raw material cost. So, corresponding entries are there.
Okay. This 240 crores, how much in last quarter?
Oh, it was negligible.
Okay.
Yeah.
Fine.
Normally our trading sales in a year could be 40-50 crores. Normally it is not that large. It is a one-time transaction. Yeah.
Okay. Fine. Thank you. Thanks for the clarification.
Yeah.
Thank you. We have the next question on the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, thank you. Just one question just to get my understanding correct. You have a significant difference in the production and the sales volume. So on the P&L, the cost that we see is based on the production versus the revenue that you show is based on the sales volume. Is that understanding correct?
Yeah, no, the difference in the, sales volume, like I'll just give you an example. In pellet, we consume almost about 33% of our production for captive use in sponge iron. Similarly, the sponge iron, whatever is produced, almost 80% is used for captive consumption in making steel billet. And billet goes into roll products. Roll product goes into the wire. And therefore, each product we sell in the market and there is a value addition as well. And therefore, there would be a difference in sale production volume and sales volume.
Okay, so a part of that difference is the in-house volume.
In-house consumption, yeah.
For the upstream products. Okay, got it. That's all from me. Thank you so much.
Yeah.
Thank you. We have the next question from the line of Anish Kumar from Infinity Alternatives. Please go ahead.
Thank you, sir. And sir, a couple of questions. One is in pellets. How much is the production guidance? Do you think that we were looking at doing roughly 700,000 tons per quarter. So can we start hitting that from the 500,000 that we did last quarter?
No, last quarter will also be higher. Yes, Abhishek?
No, please go ahead.
Yeah. Last quarter also, we had a higher volume. It's not 500,000 tons. 500,000 tons could be the sales.
Right. No, we've done 1.9 in 9 months, and our guidance was 2.7. So would it be?
Our guidance was 2.6. 2.7 is capacity.
Okay, so I'm just your presentation. But do you think that we can hit the 2.6 guidance from?
Yeah, 2.6 we can hit.
2.6. So we can have 700,000 this quarter.
Yeah. No, so maybe 20,000-25,000 plus minus, but it is closer to that number.
Sure, sir. And so second thing was in relation to the use of cash. Now we have 500 crores of cash, and the export realizations have also come back to reasonable. Even in the worst of times, we generated positive cash flow. Are we looking at doing a largish payout to the investors, either in form of buyback or a one-time special dividend, given the fact that we're generating serious amount of cash flow from the business?
No, you are right. The point is that, we have a lot of capex lined up. We're already going through a capex. If you see my presentation, there is a capex in put together solar plus other debottlenecking capex, including already done is close to about 1,000 crore. We have announced further capex about 1,000 crore in pellet and mining business, and then we are looking to set up a greenfield steel plant also. So, our dividend payout will continue to be as guided in our dividend policy of 10 to 15%. And we are not looking at buyback because we need to conserve cash for our capacity expansion project. We do not intend to raise much debt. We'll try to set it up through the internal, generation only.
So in terms of the steel plant, why is the thought process? Because it will be ROC dilutive for our business. So why do we think that we should go down that path?
ROC diluted, you are into the business, you have a mines, and you need to consume your partial pellet into the manufacturing as well. So it's a good hedge between pellet business and steel business. You have an opportunity to sell pellet, which gives the higher delta, and you consume the steel also. Steel gives also an opportunity. So rather than just giving the dividend and looking at pellet business, we do not see business is like this. We will want to restrict ourselves to a pellet company. We'll continue to manufacture steel.
And how much do you think will be our capex for this year? We had projected a 400 crore capex. How much do you think will be our capex for FY24?
FY24, we'll place the order for our new pellet plant. Once we get the approval for mining capex will start, which is to about 200 crore. We have to give the advance for our new pellet plant. Once the approval is in place, we'll start building the, give the case. So maybe there is a time lag of 6-8 months. After that, the case will continue to be, required.
Yeah. No, I'm just trying to understand as to what.
No, that depends when we are able to get the approval, and after that the money would be required. As of now, my requirement would be closer to about maybe balance capex, which is close to about not more than 250 to 300 crore in whatever projects which are in pipeline currently.
Okay. And lastly, sir, on the ferroalloys business, have we seen a recovery in the prices on the ferroalloys business also?
Yes.
So are they similar to Q2 levels or?
No. It is much lower, much lower.
So what will they be?
It is, ferroalloy is selling closer to about, say, silicon manganese, which we sell closer to about 75,000 rupees.
Silicon manganese.
Last financial year, it was more than 1 lakh rupees a ton, 1,20,000.
Right.
So it has not come to that level.
And how do you see that going forward, sir?
Maybe it is unlikely to go in a hurry to the, levels which was prevailing last year.
Okay. So we should budget in 75,000-80,000 rupees.
Yeah, 75,000-80,000 tons max.
So basically the short term will.
The only silver lining in for the ferro business is, a lot of capacities of ferroalloys is going out of production, especially in high energy markets like, Africa, Europe, or because ferroalloys has a lot of power. At the same time, the raw material cost has gone down compared to last year. So that's the only silver lining. Rest, how the market is going to play depends on the demand and supply.
Right. So basically, in short term, the volume growth is basically going to come from mining and the pellets go inching up.
Yes.
10%.
Right.
Is that a fair way to look at it?
Yes.
Okay. Thank you and wish you all the best, sir.
Thank you.
Thank you. We have the next question from the line of Ramesh from Godawari Ventures. Please go ahead.
Hi, thank you. In your presentation, it was mentioned that the pellet sales volume has, while production is more or less in the line, it was 4% up, but pellet sales volume has gone down by about 13%, and your realization is more or less flat, like in the sense from Q2 to Q3. So what is the forecast for Q4 in terms of sales volume and realization? What can we expect? And as you mentioned, second question, as you mentioned, some shutdown the plant of sponge iron and all. So what will the additional maintenance cost which we expect in this year? Thank you.
Abhishek, would you like to?
I will take. So on the pellet side, probably the sales were a little down because probably our in-house DRI production was on the higher side. So 4 to 5% doesn't make a difference because if one of our kilns is shut, so that additional volume goes into the market for sales. So that is why there's a difference in the production and the sales volume. On the Q4, since we've already released a statement on Saturday, we are taking a shutdown of 4 to 5 weeks for the DRI unit. So that entire volume which will be consumed in DRI will be going in the market. So the sales volume in Q4 of pellet will be much higher compared to Q3 or even Q2 because of the shutdown of the DRI plant. DRI consumes about 70,000 tons of pellet every month. So that additional 70,000, 80,000 tons of material will be dispatched in the market. So the sales volume in Q4 will be much higher. On the realization side, Q3 was average about 8,000 rupees. Q4, the average should be about close to 10,000 rupees, say 9,750, 9,800 rupees. So a jump of about 20-25% compared to Q3.
So there will be a substantial increase both in sales volume as well as realization for pellets.
Yes.
And pellets being your mainstay sort of in terms of revenue, so it will be a good picture for Q4.
Yeah, so overall we expect better Q4 numbers compared to Q3 in terms of profitability, definitely.
And any additional cost which will incur in is maintenance and.
No. See, we already have a maintenance schedule for the entire year, so substantial cost won't be there. Just a regular maintenance. There's the new turbine work which we have undertaken. So we are using the opportunity to take up that as well, so that going forward when the turbine is commissioning stage, we don't have to take a shutdown for the plant.
Right. Thank you.
Only the fixed cost amount will go into the costing. Since the plant will be shut down for next 4 to 5 weeks. Apart from that, nothing major.
Okay. Thank you.
Thank you. We have the next question from the line of Ganesh, an individual investor. Please go ahead.
So can you hear me well?
Yeah.
Okay. So from your presentation, I see that we are concentrating mostly on our Aridongri mines. But our estimated availability from both Aridongri and Boria Tibu, they are like by and large equal. So any reason for that, or when do we plan to use the Boria Tibu mines?
Boria Tibu mine, some production will continue to go, but our focus is on Aridongri initially. And then later on, when Aridongri volumes go down, we will use Boria Tibu.
Okay, got it. So just one more question.
Life is much more than what we can consume. So it is better to focus on one location, reduce the cost. If you focus on two locations, then the cost also increases.
Got it. Yeah. Just one more question. I'm assuming all our the huge capacity additions, the long-term additions we have are in the new location. So, but we have also been judiciously, gradually adding capacity in the old location, the current location that we have. So, for this next 3 years or so in our plan, can we assume that our capacity is by and large done in the old location? Or will we have opportunities to have small or gradual additions?
Capacity is already done. We have some space and some additional land which we have purchased, which will help us setting up additional pellet capacity of 3 million ton in the existing location. And after that, yes, there is no more scope of doing anything. And most of the debottlenecking capex also we are simultaneously doing it. So we will be done with capex except the maintenance. There will not be any new capex at the existing location. Everything will go to new location.
Okay, got it. So this pellet plant that you just talked about in the extended location nearer to the existing location.
No, we planning for setting up one pellet at the new location, but since the land for the pellet is getting delayed, so we thought of setting up the pellet plant here, so that we can prepone it at least.
Got it. And this is also we have a time frame of 3 years, or it will be a lot sooner?
No, it will not. It will be done within 3 years because the new location is still uncertain because it is still taking a lot of time in land allocation and other things.
Got it. Thank you for the opportunity, sir. I'll just go back to this.
Thank you. Participants are requested to kindly restrict your questions to 2 per participant. We have the next question on the line of Shivam, an individual investor. Please go ahead.
Hello. So thanks for the opportunity. I would just like to know the range of the ferroalloys EBITDA. Like if you can tell me around the past years what it has been from the maximum to the minimum side. Can you tell me?
Prices?
Yeah.
So
like which you were saying the 70,000 one. Yeah.
No, see, Dinesh, I'll take this question. So I'm aware.
Yeah.
So see, on the pellet prices, the COVID phase of 2 years was quite, I would say one-off incident where the prices had gone up to 1.2 lakh rupees or say, 1 lakh average was there for the entire year. That was a very exceptional period. Usually the pellet prices hover about say 65,000 rupees. The lowest, if you say, probably when the cycle was quite low in 2013-14, the prices were as low as 40,000 rupees, 50,000 rupees also. And on the higher side, you have seen about 1.25, 1.3 lakh tons. But on a longer term, I would say, considering a liter of 5 rupees on a year average is what we usually consider by reviewing any project. So 5,000 rupees a liter when the market is quite settled and normal.
So this is of ferromanganese or silicomanganese? Can you just...
No, so we don't make ferromanganese. We are mainly into silicomanganese of different grades. So I'm talking about silicomanganese only.
Okay, silicomanganese.
We do produce ferromanganese, but that's very probably once in a blue moon with this opportunity. We think the market is good, but more or less we are into silicomanganese market with different grades.
Okay. So, and so any reason to sticking into the silicomanganese only? Like the other companies usually switch according to the market conditions, basically.
No, there is no specific reason. Just that for making ferromanganese, the purchase of the raw material has to be accordingly. To make ferromanganese, then you have to import a lot of raw material. the Indian manganese ore doesn't have the quality where you can produce good quality ferromanganese. So accordingly, we have to plan all the inventories and all. And even the silicomanganese market in India is quite substantial. And with exports happening, so we see sticking to one product, it helps in planning the inventories and other things. Switching back to ferromanganese against silicomanganese, the raw material inventory goes up quite to substantial level, because if you maintain different grades for different products. So at a group level, we thought let's stick with silicomanganese only.
Okay. And sir, can you give any guidance on volume growth, and can you tell us that why is the ferroalloy under some pressure right now?
See, the ferroalloy is under pressure because of two things. One is currently the export market is quite subdued from India because Middle East, Europe is one of the big markets in India. And as you are aware, because of high energy prices post the war, the consumption of ferroalloy has gone up substantially. About 20 million capacity of steel is out of production in Europe since post the war. So that is the reason the export markets are quite subdued. And, to balance out the demand and supply, India needs to keep exporting ferroalloy, or else the domestic market will be oversupplied and the prices will be under pressure. So that is the reason, the ferroalloy prices are quite under pressure right now.
And so your volume growth guidance for ferroalloy, any?
We have been producing at the ready capacity level, say plus minus 10%. So our volume growth will be on the same level. We are not expanding into fertilizer much.
Okay, thank you.
Thank you. We have the next question on the line of Punit Mittal from Global Core Capital. Please go ahead.
Hi, just a follow-up question. You had said that your margins for the pellet business is the highest, and then the other upstream products are lower prices. And you also said that you don't want to just stick to a pellet company even though the ROCEs of the other product may be lower. Can you explain why is the case if the business pellet is generating substantial EBITDA over other products, why would you not stick to pellet? Thank you.
See, the reason
Go ahead, Abhishek.
Yeah. The reason we don't want to stick only to pellet is that because, a lot of expansion is happening in India when it comes to pellet capacity. A lot of our current buyers will turn into producers or rather become a machine seller in the market. And, depending only on one product lifelong, I don't think is the right strategy. Because as you've seen, the iron ore prices also gone on to below $40. When the market was at quite a low level. So, and pellet market or iron ore market, as you're aware, are mainly driven by China market, So I would say it is a big question mark. If the market goes down, then straight away our profitability, takes a big hit. We see Q3, moment the pellet prices have started going down, our profitability started going down. So, looking into that, we want to, probably be in the middle where we are a pellet player, where we can catch opportunity. At the same time, we enter the steel market also, and you use that opportunity to make good quality steel and earn profit in that as well. So I say it's the middle part.
Got it. It's actually hedging your business.
Yeah, exactly.
Yeah, okay. Got it. Thank you so much.
Thank you. We have the next question on the line of Hitesh Arora from Unifi Capital. Please go ahead.
Thanks for the opportunity. It is just, there's a chart in your presentation. So the cost of captive iron got landed cost around $2,900. So just want to understand what is the cost of pellet production. So you've got this roughly 2,900 rupees here. You probably would have some conversion cost and would have probably some transportation cost. Could you roughly break it down? How much is it, or any other component that I'm missing?
See, on an overall level, as you've already mentioned, our mining cost is about 3,000 rupees a ton landed to the plant. And overall 3,000 rupees with beneficiation and other operating costs, roughly today's pellet cost is about, say, 6,000 rupees a ton.
Okay. So 3,000 plus another 3,000.
Yeah, because the energy cost on the higher side. So the conversion is about, say, 2,000 rupees. And additional, 1,000 rupees on account of, the yield loss where we beneficiate and make high-grade pellets. So put together, currently the cost is somewhere around 6,000 rupees a ton.
Okay. Fine. That's helpful. Thank you.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you all for joining the conference call of Godawari Power and Ispat Limited. Although we have tried to explain to all your queries, if you have any more remaining, you can always touch to our investor relation team at Go India, or you can directly reach us. Thank you very much, and thank you for participating. Thank you all.
Thank you.
Thank you.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.